Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Happy Monday. Hope everybody survived the holiday weekend. Had a great Thanksgiving. We certainly did. Feels good to be back at headquarters here. We had a great holiday down in Arizona with family. Enjoyed the University of Arizona State rivalry game. Now back at it. Hope you and yours had a great time. Big story today: Chinese unrest with regard to zero COVID, just kind of sparking a little bit of a risk-off tone globally. Commodity markets weaker on demand worries. This sentiment comes just in time to, I just looking at the charts, looking at the indices. The Russell 2000 has been kind of that leader among the broad sectors to try to break above the 200-day. It's been flirting with it for a while. Bumped its head up there on Friday. It looks like it's going to pull back today. Same with the S&P as far as that goes as well. So something I definitely keep an eye on. It looks like maybe this current sort of risk on bear market rally's got a little bit of a pause here. I'm not going to call it a total retreat at this point, but nevertheless something to think about. Dollar down this morning, which is interesting. Bonds are bid. The TLT, so that long duration treasury, which we've been saying might regain its status as that flight to safety during stock market moves to the downside. Here we are looking at an increase of 75 bips this morning on that TLT with the SPYs looking down 75. So total inverse reaction there. Interesting. Gold and silver also acting well here in this market. We do own the junior miners and continue to own those. May even add more exposure. But in general, we have been lightening up last week on things that aren't treasury or precious metals related or energy. We have not been lightening up on energy either. But we're going to keep a close eye on energy. The price caps and incremental sanctions against Russia from Europe going into effect on December 5th. That's right around the corner. Initial thought there: these incremental sanctions could lead to supply disruptions. There's absolutely no evidence of that sentiment today with a heavy energy tape. But something to certainly keep an eye on. But the treasuries, that long duration treasury move, I'm not sure how much further it has to go or what have you, or if we really do regain that flight to safety. The 2-year is kind of that sort of ground zero for reflecting Fed funds rate and terminal Fed funds futures. So that's probably, I don't know if that will be the best long, but that's probably got more work to do in terms of rates going up. As it seems to be, sentiment is we're going to be above that 5% on Fed funds come whatever the peak is, April, May of 23. But in general, if you are a financial advisor thinking about incorporating some active management in 23, which we think would be a very good idea, reach out. Let's have a conversation. We are in the business of helping FAs achieve success in their practices through our investment models, through our outsourced CIO functions. Reach out, have a conversation, see if we can help. We'd love to. It's a tricky market out there. People need the help, all kind of the help they can get in terms of some smart ideas and directions on where to head. Have an awesome Monday. We will talk to you in the morning.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.